Hi, everybody. How's everyone doing? Everyone doing okay? Brock, Kevin? Everyone, take me out to the ball game. Take me out to the crowd. Give me some peanuts and Cracker Jacks. I don't care if I ever come back. So it's root, root, root for the home team. If we don't win, it's a shame. 'Cause it's 1, 2, 3 times you're stopped out in the old ball game. Let's play ball. Oh, no fans allowed. Pete. Anyway, I'm going to give you a pitch. You guys ready for a pitch? It's a sales pitch. Join ForexAnalytix right now before I tell you what I think. 5, 4, 3, 2, 1, join.
What did they do to you in the hospital? Just be honest.
I got drafted by the major league.
Did they inject you with something very strong or what?
No. This is really just my awesome personality, buddy. So it's a green screen, everyone. So there you are, Paul. Thank you. So here's silver. Let me get rid of me. Okay, Monica liked it. All right, so silver, looks like it's breaking out to a new high, but look at it daily. So this was the March high before the crash, and looks like, we're trying it. But look at silver. Here's the March high. And look at gold. Here's the March high. So through all of this, and all of this, silver is still not taken out its March high. It's not that far away, but I'm getting some things here in silver, and the gold silver ratio, I tweeted this out, and it makes me have a hard time favoring silver over gold down here. Okay, so
you always hate my silver, Dale. Why? I'm kidding. No,
I'd love to buy it at 14.
Yeah, me too.
Since I missed the bottom, and you know what? And I think there's a chance. So anyway, look, I'm underwater, and I know Blake's gonna give me a hard time. I did short silver yesterday. It worked. Haven't recommitted to the trade again, but I'm underwater from 1794 and 7 in gold. So and I'm starting to get divergences blown out, which bother me. We're over 70 up here, but let me just say this: could go to 1810, could go to 1820, could go to 2100,
2810, 3810,
5,000. But you know what? It will. But if it closes back under this, and I'm not the only one, that a lot of, this was a 3 drive to me. I waited for this, but we're getting a throw over. And, that a throw over makes people throw up, because then, kind of blows out divergences. But a conservative way, if you want to try a gold top, is just wait for the throw over to be negated. And that's going to be right around yesterday's highs, around 1797, 98. And not just a candle, and it's starting. Not just a candle that touches the line, but a candle that closes back within this. And, to me, it was a 3 drive, and I bet Ellioticians would say this is a ending diagonal.
Well, you never know. I know some Ellioticians that are shorting it from 1400. Does that ring any bell?
Well, how about a good one like Craig Horvat was on last week, who was talking about an ending diagonal? Okay,
Dale,
the key word.
I'm a long-term bull. You know I'm a long-term bull, but I actually agree with you. And look at DSI; it's in the 90s.
90s, yeah,
So,
yeah.
So I think we're due for a correction. Even though I think
Yeah.
we're going a lot higher, I think we're due. I think you're right.
Yeah, so I don't think you chase it here. And I think that there's an opportunity if it closes back under this ending diagonal. The key word in that is ending. And Greg, I asked Greg when he was here last week, it's a great advantage of, working with pros is what's going to happen afterwards. And he said at the minimum an ABC. So some type of ABC could happen from here, from 1820. I still think that we'll see 1700 before we'll see new highs at 1900. So you can't trade it like that because you'd have to risk $80. So you probe it or you wait for a signal. You really don't have a signal until we're back under the 1797 level. And, I think what's going to be part of it that hasn't resolved itself yet is going to be, I think the dollar's got to turn up. I had this coming into the beginning of the week, and we had this breakdown Monday, but, fought its way back Tuesday and it's still holding. We get back over 97.20 and then 97.80. And in particular, this 98.30 level, which is this low, then you could have that, squeeze in the dollar that a lot of dollar bulls have been talking about. And, you've had to be a pretty patient bear here. So 97.80 is going to be the first sign that the dollar might be turning. We still haven't taken out this low. And I thought after a breakdown, usually when you have breakdowns and you don't have follow through, it could just be patient and hesitating before it goes. But this one has me a little suspicious that there was not even any follow through. So I think the key is going to be the dollar. This one I was right on from Monday. We had a decent little sell-off in the S&Ps. 3100's the key number, but could we rally again? This looks maybe corrective, just an ABC. But under 3100, there's problems in the S&Ps. And you know what else is something interesting, that with all of these new highs in the S&Ps, crude to this point still has not taken out this high. Okay, so, and that's been going on for a few weeks. Had this line last week, it came off of, it's not breaking, it's not exploding, but we had this huge rally of risk, right? All of this, and oil is just meandering here. Maybe it's got to take this high out first, but be careful. I still think there's a break coming. Bitcoin shows a 7-day advance on S&P chart. Wow. Okay. Maybe Steve could do that a little bit later. I'm going to turn it over to Blake. There might be some news coming up, and Blake likes to get his thoughts out to you guys before he gets too busy. So what are you thinking, Blake? Dollar just, sideways?
Yeah, I think the dollar is at risk actually of a rally.
Okay.
Yeah.
Good. I love when you agree with me.
Well, and it's not,
I know it's not. I know
well,
you
no,
I know you've been coattailing me for 3 years.
I have.
Yeah. All right. As
Busted.
a contrary indicator.
Busted. Totally busted. But what I'm looking at is a flag pattern that's not following through. And so,
okay.
Now here is the risk. And I'm actually following something more so than just the dollar. Actually, let me ask you this. Let me stop for a second. Is there one currency pair? I had to take off my glasses and kind of just relaxing a little bit here. What's the one currency pair that can lead the dollar index? Do you know the answer to that?
Well, you mean euro comprises most of it, but that's too obvious.
The euro will drive most of it. Yeah, the euro from a weighting standpoint will drive.
How about U.S. dollar yen?
What's that?
Here's the SEC.
Yen?
No, I'm a big U.S. dollar Canadian fan. So when the dollar Canadian starts to turn, the loonie starts to turn.
Okay.
And Nitish was in the chat room, answering in the chat room and not in the chat box on the webinar. So just
he came in to make sure that you got it right.
So let me just show you the thing that has me a little concerned about dollar bearishness. And I came in basically at the beginning of the week selling dollars and buying the euro at 113.10 or 12, and then I sold it at 112.95 or something. I got out of it because it's just not going anywhere. And that's the problem, is that when you have equity markets that are rallying and the dollar is not rallying with it, if the equity markets start to get heavy, the dollar's likely to start rallying. So now you've got a situation where in the event stocks start to rally, this will happen real quick. Okay. Yeah. And that's when you have to start looking at the dollar index and going, okay, well, where, oops, here, I'm going to actually redraw that. Where is the breakout point in the dollar where I just don't want to be short? My opinion would be right here. We get above 97. Yeah, well, yeah, like maybe 97.30, 90, somewhere around there. Yeah. We start getting above that, you don't want to be short. And then we get above this 38% retracement, which is the 97.56. You definitely don't want to be short on a daily close above that, because then you're going to unwind all these, dollar bears that are out there. All right. And then let me just share with you is the dollar Canadian is threatening to break out. Last night, overnight, it probed trendline resistance while I was sleeping, and it was it looks on the cusp now of actually breaking out. And if we close above this trend line, I would not want to be short dollars. No if and or buts for me. Just not ain't gonna happen.
That's a nice tell. USD MEX kind of give you a little
I'm sorry?
bit of a, does the USD MEX give you any kind of
yeah, and well, no, it really more or less
like CAD?
It is, but it actually gives me more of a cue onto the equity markets intraday.
Right.
And this is a very similar situation. You got the dollar Mexican peso, where it looked like it was going to hell in a handbasket.
Yeah.
With this pennant, we get this reversal. The dollar Mex does one of these.
Yeah.
And stocks are going to go lower. I mean, it's telling you clearly that stocks are moving lower. So I don't.
Looks good.
Well, it looks like it's about ready to squeeze the crap out of everybody, doesn't it?
Yeah.
I mean, I'm not long, but it's something that I am observing, quite carefully, because, in the event that the equity markets roll over a little bit, we're going to see a push higher in the dollar Mexican peso. And this is a comment that myself and the guys in the office have been making for the last week and a half. Stocks are going higher. We're looking at the dollar Canadian. We're like, man, this dollar Canadian's holding up well. Every conversation we have every single day is, man, this dollar Canadian's holding up well. You see the Aussie ripping into new highs, or, testing its recent highs. Kiwi, trying to break out to the upside. Then you got the Canadian that's just not going down. And maybe it's a little bit of crude that can't break above that $41 level that you were just talking about, Dale.
Yeah.
Maybe it's a little bit of that, but at the same time, like I said, the dollar Canadian gets above this channel resistance, and I don't think you're going to want to be A, short the dollar Canadian, B, short dollars in general. Okay, because it's probably signaling more of a risk off. Now, is it possible that we get some risk off today? This right here, this S&P chart, was this candle is called dark cloud cover. All right. The NASDAQ, the daily chart on the NASDAQ, that's a shooting star. You know, the Dow could not close above the 200-day moving average, or it closed above the 200-day moving average. Now we have dark cloud cover. This is a bearish sign. Telling you guys, we got some reversals that had set up yesterday in the market. You might look at the market right now and say, oh, Blake, well, you know, the NASDAQ's up, you know, 0.3%, and, you know, futures are up, and Dow futures are up, and S&P futures are up. Yeah, barely. And it's pre-market. And when the market opens, you gotta, and actually by the end of the day, I'd like to see where the equity markets close, because if they close lower, this will be, you know, probably more of a bearish setup going into the end of the week. So again, where does that lead the dollar? Well, that leads the dollar probably higher, especially against some of these commodity currencies like the Kiwi and the Aussie. And look, let's face it, the Kiwi's up against a multi-year trend line here, right? Yeah. It's not like, it's not right, Dale. I mean,
that was your chart of the day.
It was my chart of the day. Thank you very much for that observation. And you know, in all actuality, when you're up against a multi-year trend line and you got divergent relative strength, this trend line will break at some point. My assumption, it's going to break. If it doesn't break this time, it's probably going to break the next go around. You know, we might see some risk off.
Yeah.
And then
like a right shoulder.
Yeah. There you go.
Yeah.
Something like that. That's entirely possible. And I don't want to say that the Kiwi can't break out right now, because it can. But again, divergent relative strength. We're up against 2014 trend line. Aussie dollar struggling at 70 cents. And this is such big resistance. I wouldn't be surprised if this breaks too. But, you know, that's probably more realistic, right? This would be a hell of a head and shoulder pattern, right?
And Grega yesterday showed that Aussie could do this too, Blake. When he dropped in yesterday, Grega.
Oh, I didn't. You know what? I missed him dropping in.
Yeah.
Damn
well,
it.
You never know when he surprises us.
He's the wizard.
Yeah,
wizard. Okay, so hey, one last thing I want to talk about as far as gold and silver, and you guys bring up a good comment about the daily sentiment index is bullish, right? And it's extreme. So if you got price moving higher and sentiment moving higher and at extremes, we could probably expect a little bit of a pullback. But if you have price continuing to hit new yearly highs and extreme sentiment for bulls, yeah, I mean, we might, pull back a little bit, but when you hit new yearly highs and the sentiment is extreme, that's not a bearish sign. That could be a sign that we might get a little bit of a pullback soon, but remember, that's like bullish when you're getting higher highs and higher lows and you're hitting highs of the year. Speaking, you got gold in that situation, right? And silver, just so you guys are seeing here, this is trying to build that breakout today. And if silver closes above 1850, we should probably challenge this resistance. And so if you think you're like, well, silver and gold, the sentiment is extreme, but it can be, if DSI is at, let's say, 90 or 89 or wherever we're at, and I can't remember it right off the top of my head, and I don't have it right in front of me, but we can see DSIs register mid-90s for days in a row too. So don't forget about that. I look at silver, and I think silver's got major resistance at this channel. This channel has really kept us in check since 2014, post-financial crisis. the risk is that if we break above 20, silver's really going to go, no matter what the sentiment or DSI or whatever is happening. It's going to go. Now I was having a conversation with one of the guys in my office. We're talking about precious metals, and we're all like, yeah, where do you buy this? I mean, it's just like, it's like you get up every day and you're like, damn, I missed out on that. Where do I get it? And it's like, but we were talking about like the drivers from the end of 2009, 2010, about the massive liquidity that central banks were putting in, and one of the guys made a really good point with me. He's like, yeah, but you got to think central banks were actually buying back then, where now that they're selling, they're net sellers. So why are central banks net sellers of precious metals at these levels? What do you think? What do you think the answer is, Stelios or Steve?
Well, the last time a major central bank was a net seller, was a big seller, was the UK, and they sold at 200, didn't they?
That was a great trade. Great trade.
Whenever central banks sell gold, I don't know what to make of it. Usually, they're wrong.
How about to fund a deficit?
Yeah.
No, I don't think so. I don't think that's the case, because I think during the past few months, we live in I think it's going to last very few months, maximum a couple of years, the utopia that they think that you can, in essence, monetize as much of your debt as you want. So I don't think that, at least in the developed world, they're selling gold to fund the deficits. I don't think so. And in any case, it would make, for example, the US is going to have, like, it's going to blow out any type of record in the deficit. So, I mean, with the type of deficit we're looking for this year, it will barely move the needle, regardless of if they do it or not.
Okay, well, I'm not going to argue the guy from my office's point to you.
No, I'm not. I'm not.
I'll just I'll let it go from there.
I can tell you as a fact, though, that countries like China, Russia, they're not net sellers of gold. They're net buyers. Now, about the developed world, to be honest, I haven't checked it out. So I'm not doubting what the guy from your office said. I'm just saying that I don't think it's to fund deficits. Perhaps.
How do you know what China's doing in anything?
Yeah, that's true. I mean,
how do you know they're not selling gold? I mean, as a commodity trader, they come out with news, China buying beans, and China would just sell a ton of beans.
Yeah, about China there's always a question mark to whatever you read or they report. I'm not going to doubt that.
Okay, well, I'm just pushing back on China.
You know how China is.
No, I don't.
But in any case, I mean, it's a black box.
Yeah.
Okay.
Oh, yeah. Okay. See what you started, Blake?
Yeah. He. Okay. All right. I'll just leave it there. So, so how you guys doing now that we're all having a conversation? How's it going, Steve? Stelios? What's going on?
They have nice profits to sell it too.
Yes, they do. Yes, they do. Right. So what's happening?
Yeah. All good here. I'm at another island. I'm not going to post it.
Oh my God! Yeah.
I'm on another island.
You're like Magnum.
Greece has a few nice things. This is one of them.
So I have one of my probably most level-headed friends that I've known since childhood, who joined the military and the Marine Corps with me, and I've known him since we were in middle school. He called me yesterday in absolute freak out mode. I now understand that the lockdowns, for us anyway, in our part of the world, is really getting to people when he calls me and he starts screaming at me. Not screaming at me, screaming, kind of expecting me to scream with him, I guess. Be more of the conversation. But you have to keep in mind here and where I live, we've been on basically lockdown. Not really lockdown, but for the most part, people aren't doing anything since whatever it is, mid-March, and now it's hot and people don't go anywhere and people don't do anything. So I think people are going a little stir crazy. I really wish I was in an island right now.
Yeah.
But instead I get to do a makeshift island on my, in my pool on a raft. So that's it. That's all I get.
Yeah.
So,
Anyway,
Steve, how are you doing today?
I'm good.
Yeah.
Quite busy, but everything's okay. Everything's under control.
Good. All right. Well, again, I think the only thing that's really moving overnight, that's really moved overnight, is the move in precious metals. We do have, futures that are just kind of bouncing around, break even, up a little bit in the NASDAQ, but really everything's kind of quiet. What do you guys make of yesterday's moves in equities?
I personally think it was just just a pullback. There's no doubt that the momentum is still bullish. They're buying the dip everywhere. So to have a small pullback is kind of normal. I've said it before. I think we're going to have a proper leg lower, but I don't know when it's coming. But I don't know what Steve thinks, but I think it was just a pullback. You had 2 or 3 really good days. You're going to have a pullback.
Yeah.
And I'm not bullish, not even close. I think we're going to go lower. I'm just picking, trying to pick the right place to short.
Yeah. Well, Steve, what do you make of yesterday's, kind of key reversal days on some of these indices?
I think it's too early to say. I mean, we need to see at least some follow through. We started the day quite on a positive note. We closed on a negative note, which is a beginning. But unless I see at least a back-to-back pullback, in this market environment, which is completely crazy, I have to be very, very skeptical. So I need to see at least some type of follow-through. I mean, decent candlesticks yesterday to close the day for the downside, but can we get 2 in a row?
Right. All right. Well, I'll let you take over and see if you can shed any new light to our traders. One other thing I wanted to point out regarding the S&P, just so everybody sees this. This is the downtrend line from the highs. This would be the all-time highs here in the S&P at the beginning of February, right? And so if you look at that high to our high that we had in early June to yesterday, it's basically comes in at 3,200 with the S&P. So, while we're below that 3,200 level, I think you have to be a little careful. Now, if we break above that 3,200, should open the door for, a retest of the highs. It should, but just be a little careful while we're below that.
The weekly candle, Blake, has the makings. It's only Wednesday, but it has the makings of a reversal candle.
Yeah,
See,
I mean,
we already have a nice little wick there.
We do, and if we close at the bottom of our let's just say we don't even sell off that aggressively, but we close at the bottom of the candle or the lows of the week, then you'd have a gravestone doji. Yeah.
Okay.
Sure. All right, guys.
Good luck today, man.
I'll let you guys take over. It's all yours, and we'll see you guys in a bit.
Thank you, mate.
Thanks, Blake.
Thanks, guys.
Guys, speaking of deficits and how central banks can cover them, when you can borrow 10 years at 0 or 1%, why sell something why sell anything which is real? I would never do it.
True.
Stelio, I was researching, by the way, as the rest were speaking. Central banks are not selling gold. I found a lot of information. All of them show that the pace of purchases has slowed down from 18 and 19, which we know that there was a frantic buying of gold from several of the central banks, and central banks remain net buyers of gold, albeit at a slower pace than they did the last 2 years. So it's not even the case that they're net sellers at the moment.
Yeah,
just isn't.
And I think
wouldn't make much sense if you ask me.
Yeah, and in the long term, they are net buyers. Obviously, there are the odd events where they get to sell. Don't know why, but they do. But anyway, well done for getting that information. Actually, I wasn't completely sure. What are we talking about today? Well, today's been very quiet, like Blake said. Metal's really only moving. The main thing remains equities and how we're going to continue from yesterday's candle. Will we see continuation? If yes, then we might get a case for building a bear case at some point. But for the moment, momentum is still higher, and we wait to see what happens. We have a friend here who's saying, what's gonna keep central banks from using their money to buy up everything and not just gold, and Powell is backstopping the market. Yes, they are, and in the long run, they're gonna succeed, because central banks in the end they will succeed. But the question is, in nominal terms, they're going to be higher. What about in real terms? That's a very different story. And also, we've seen that when panic sets in, just like in March, markets can just go one way very aggressively, like they did in March, and we saw that, right? And the central banks were still there. They obviously have pumped in a lot more liquidity, but it's not to say that they weren't already very accommodative. They were, and they're pumping money in every way possible. I was reading the US is funding a few companies who are manufacturing some vaccine candidates, and I was reading there's a company called Novavax or something. They were given $1.6 billion of funding, and $500 million to another company. It's huge sums of money. Obviously, it's a very serious issue to find a vaccine or some kind of cure or whatever you want to call it, but there's a lot of money being plowed into it, and they're going to keep doing that for sure. But then again, you read about the cases, the new cases and hospitalizations and all that, and it's still growing. In the US, I was reading that there were records in one-day records in a few states like Texas, and this scares me. It's far from over, unfortunately. And no matter what the markets want to tell us, this is still here. And what happens when we hit the fall? That's another issue. So I'm still very worried, unfortunately. So that's why I'm not long, and I'm not short equities either. I'm long silver and I'm long Norway, which is risk on. But I'm very scared of being, I don't want to be long equities up here. End of story. What else? Not much else to say. It's been
Stelio, I don't know if you noticed, because I know you were traveling. We did have a lot of news from the UK today. I mean, actually, what was it? Something like an hour ago.
I missed that. What happened?
Sunak was speaking. And he announced a lot of things, a lot of measures to stimulate the UK economy.
Okay, I'm going to read up on that because I missed it. I was traveling.
Yeah, measures to protect the jobs, to stimulate the housing market, something like, I think, taking off the stamp duty on houses up to $500,000 or something like that, cutting down the VAT for hospitality sector to 5%, I think from 20, if I'm not mistaken. And in total, the measures were amounting to something like 30 billion, which, for the UK is a decent sum. Yeah.
Especially when they're targeted like this. It's one thing to be doing bond purchases of, 500 billion, and another thing to do 30 billion of actually targeted, real things that actually make a difference in price in certain things. So that's good. Well, theoretically, it's good.
Yeah,
I'm going to read up on that. Thank you.
Yeah, that's what you missed. Other than that, anything else we had overnight or?
No, not really. And actually, thank you, Joshua. I just put the link to Sunak's tweet with everything. I'm going to read up on that. Sorry, I was a little bit unprepared today. Otherwise, I've not much. Actually, the ironic headline of the day was Brazil's president tested positive for COVID. Did you hear that?
Yeah, yesterday, actually.
He was the one who had been for weeks or months or whatever saying, this is nothing. This is a it's you know, it's I think, I'm not sure if he said he was made up or something, but basically he was dismissing it completely and saying, oh, there's nothing, don't worry, and we're not going to do anything.
He's going to have more ammunition to dismiss it if he passes it without any issues, though. You didn't think of that.
Yeah, true. It's just a flu. Yeah, like our friend Alexander.
Yeah, so if he's just a couple of days sick and then he's fine, then he's going to be...
Obviously, he has like 12 people on top of him making sure he's going to be fine, but...
of course.
Average Joe does not. Yeah.
Yeah, that's true.
Yeah.
Okay, perfect.
Okay.
Alexander says, but there is a lot of doubt if he is really infected. Okay, I hadn't heard of that, but yeah, whatever. I mean, you never know, and a lot of rumors going around every time somebody famous says something or does something or whatever. Because to be honest, people have several reasons to lie, so on occasion they're going to do it. Let's jump on the charts. First of all, Blake already mentioned that we had a decently, negative performance yesterday from indices. I mean, we did have something like a dark cloud cover on the S&P. We did have a shooting star on the Nasdaq. What I like most actually about the Nasdaq is not the shooting star we got, is that we never managed to close above this confluence of resistances. So as long as we're below it, I'm still of the opinion that this might prove to be an ascending wedge, and we might retest this 93.81 area.
Throw over like gold is. Right.
Yeah, might be the case.
How's that comparison chart look? NAS S&P that you showed a few times in the last few weeks.
Nasdaq to the S&P. Let's have a look at it. So Nasdaq over the SPX 500. There it is. An overthrow here as well, likely. Wow. Keep in mind that I remind you that this orange line was the all-time high from the Nasdaq bubble. There it is. Which means that we've now we've now officially crossed above the ratio, the ratio's all-time high, which unsurprisingly was registered during the Nasdaq 99-2000 bubble. So that says a lot. And needless to say, there is no easy telling when a bubble is going to burst, but all evidence points to us having another one here. I mean, the Nasdaq to the S&P ratio tells you all you need to know. I mean, we're currently at what, 336, and post the bursting of the bubble, we were trading at 1-to-1. So, the ratio has more than tripled in, these few years. And more importantly, which is usually what you see at the end of the bubbles, I mean, we've had a steady, quite strong appreciation. But since the end of 2019, the rate of which this ratio has been moving higher has really exploded. I mean, from the end of 2019, we've gone vertical. You don't need to research a lot. You can have a look at a few of the Nasdaq stocks. Tesla is the most recent example that have just, I mean, Tesla, I think, is something like 7x higher during the past year, with nothing really positive having happened in the front of profitability or whatever in that period of time from Tesla. So, market now values it 7 times more without an apparent reason. So, these are the type of things you see usually in, during bubbles. But as I said, it's not easy to time, when they're going to burst. You know what's going to happen once they do. But it's not easy to pinpoint when the turning point is going to come. Usually it needs a catalyst. in this case, it looked like the COVID would be the catalyst for this whole mess to unravel. It proved to be the exact opposite. It proved to be the catalyst for probably this financial bubble to go in its last phase, which is vertical. Because now, in essence, they've, in order to sustain this, they've inflated it to much bigger proportions. And even more worrisome is that they've involved even retail traders in it, which, to be honest, we hadn't seen much of their involvement prior to this. Now with Robinhood and everything else, and all the relief money, we're seeing simple people running in stocks, speculating like it's horse racing or whatever, which usually you see at the very, very late stages. In any case, does yesterday's attempt of a reversal mean much? Not yet, is the answer. I mean, I still think that it's likely we're going to see an attack of 3260 here in the S&P. As I said, the Nasdaq has definitely found resistance in this confluence of extensions, the 127% extension of this one and the 161.8 of this pullback. But we need to cross below this ascending wedge once again before we can claim that something is beginning. So in that context, it's not certain yet that the dollar is going to be finding a low just yet. I mean, from a technical perspective, we're still seeing the dollar index below this ascending channel. Now, admittedly, if it wants to continue lower from here, it has to more or less do, shortly, because if it fails to produce some follow through, then I'm going to start worrying and wondering if this is the formation we should be looking for or something different. But for the time being, it's just been like 1.5 days since we actually closed below this channel. So it's not enough to claim that this is not a legitimate breakdown in this case. So I'm still waiting. From a technical perspective, the charts still favor a continuation lower in the dollar. You can see here the Euro USD broke through this channel as well. Yesterday was an inside day, so an inside day is not, in any way a bearish day. It's just, for the time being, a consolidation. The cable is admittedly doing quite well, although it's, it's more than clear that it's not finding it easy to cross through this horizontal resistance area. On the other hand, it remains very well bid. We've seen the commodity currencies like the Aussie and the Kiwi have also broken through symmetrical triangles. Yes, they're not accelerating higher exactly as the S&P isn't, but that doesn't mean that they can't take a breather for a couple of days before they do so. In any case, in order for somebody to really feel confident that this is not a bullish case scenario we're looking at here, you'll need to see recent lows being violated after reversing lower. So for example, let's take the example of the Aussie. As long as we trade above 68.30, there is no real argument to be made for being short. Now, breaking below 68.30 once again, yeah, that then will, have to make us rethink that perhaps, this was a false breakout. But until that happens, all these are just scenarios. Here's the Kiwi, more or less the same type of situation. As long as we trade above 63.80, there's not really any big argument to be made in being short. Now, one more thing here. This is a triangle. The one we see in the Aussie is also a triangle. Very frequently moves out of triangles are like terminal moves. So, at any given point we see a new high. You should be careful because that might more or less be it, right? So it's not that I'm advocating that the next bullish move might be lasting a lot, but from a technical perspective, you would expect a higher high before we see a failure. And that hasn't happened yet. Now, having to do with all the theory about, divergences, etc., in silver and gold, yeah, I'm 100% on board with all that. The only problem being is that this probably is this year like the 30th time that I'm going to be repeating in this webinar that divergences are not enough. And so far, that has proved to be the case. Yeah, I mean, if you start focusing on divergences, you're going to pinpoint quite a few of them in gold and silver. But the fact remains that they keep climbing a wall of worry. They keep hesitantly moving higher, but nevertheless, they are moving higher and they're not really looking back. We've had very few pullbacks, which were either very shallow in price retracement or very short-lived, like this one, which was not that shallow, having to do with how much it retraced in price, but it was very short-lived. I mean, after such a huge period of moving higher, we saw a sharp correction that lasted, what was it, 10 days, something like that, and that was it. And then gold started appreciating again and never looked back. Bottom line, I still don't see, especially under this current fundamental environment, why somebody would want to fade gold and silver. Will they pull back at some point? Yes, they will. In fact, myself, when we drew the potential path forward several days ago when we were there about what I expect that might happen, I did draw that I think we can break higher, tag the confluence of resistances at 1823, then get a deeper pullback before we continue higher. So it's not that I'm against any type of a pullback, but I mean, we did this. Now, am I sure that we're actually going to see this pullback from 1823? No, I'm absolutely not sure that we're going to see this pullback from 1823. And even if we do, why would I want to be in the short side, since I strongly believe that the next move is going to be higher once again? I mean, gold and silver, in my opinion, they're more of the type of trade you want to be in, and in such an environment be in and stay in, than anything else. Right now, of course, I'm a trader. I mean, I totally understand. You want to scalp this market. You want to, other than owning some gold or silver, if you do, you want to, through any type of financial instrument like spot or CFDs or futures or whatever the hell you want, or options or whatever, you want to you want to trade shorter moves. Yeah, I totally get it. Still, I'm not really sure why I would want to fade it, and it's not easy to distinguish which type of a move you want to actually continue fading, because as I was saying yesterday, I've seen many candles, daily candles here in gold, that point to the beginning of something bigger lower, and they usually just fail. I mean, they give bears hope that something might be about to begin. Very recent example was this one. 1st of July, 1st of the month, an outside black candlestick. It had zero follow through. In essence, not in essence, we have actually already invalidated it, right? Why did we invalidate it? Simply because we've already crossed above its high point. So that's gone. That's it. I mean, it doesn't apply anymore. And many more examples. So bottom line, next upside target 1823, 1824. Admittedly, nice confluence of resistances. It's the 88.6% fib from the all-time high that we saw at 1920. It's also the 161.8% extension of this recent pullback. So you want a price at which it makes technical sense to fade gold. There it is, 1823, 1824. You want the equivalent price for silver, $19. 1893, the previous high. Somebody can even say a little bit lower, because look at this large channel here. Let me give it a different color. Let's make it green. So we even have this channel resistance passes from like 1865. So, you know, you might want to start fading it from 1860 to $19. And yeah, there is a chance that we're going to see a very decent pullback. Personally, I'm more interested in buying pullbacks than selling reversals in gold and silver. I think, looking at the fundamental environment, I can't envision any possible future outcome, at least in the medium term, because you never know about long term. I mean, so many factors can come in play that it's extremely hard to even imagine them. But in the medium term, I absolutely see nothing that will change the environment in a way that will make gold and silver as monetary metals unattractive. Okay. Now, of course, we're here every day. If something fundamentally really changes, I'll have absolutely no problem telling you that, in my opinion, something changed. Then, makes it, less appealing to hold gold and silver. But for the time being, the only thing I see is monetary insanity, printing fiat currencies like they're going out of fashion, like it has never, ever happened before. Economies with huge structural problems all over the planet. Debts exploding higher at a pace that we've never, ever seen in recent history. So, I mean, why wouldn't you like having some gold and silver exposure? I have no idea. Now, Blake mentioned, and once again, I have to agree with this. I mean, we've been saying it for quite some time, that USD CAD, despite of everything else, is holding up like a champ. No disagreement here. I mean, USD CAD is looking a lot more attractive as a dollar pair than anything else. So I still think there is a very good chance that USD CAD is going to break to the upside. I still view this move lower as corrective. But the counter argument is that we're still being capped by this channel trendline resistance, meaning, if I had to do something with USD CAD at the moment, I would be forced to sell it, in the sense that risk reward is extremely appealing. You can risk very, very little, hoping that you're going to see a move lower. But I'd rather buy a breakout, because yes, I'm also looking higher here, and I do think that whenever the dollar goes bid again, which we know when that's going to happen, when the stock indices turn lower, and they will keep turning lower on occasion. I mean, even if this is like a monster move that will go on and go on and go on, because, for example, now it's being fueled by excess liquidity. Afterwards, it might continue to be fueled by huge depreciation in fiat currencies, which will make it go higher, will make stock indices go higher in nominal prices. But no matter what the reason, they will keep having some sharp corrective moves lower, because this is the type of market you currently have. You get very decent periods of time that price is crawling higher without any real selling coming through, and you're like wondering, where the hell are the sellers? I mean, why isn't the market ever going down? And then something happens, and you might see a 10% pullback within a period of 2.5 days. And then the volatility goes numb again, and you see this, slow, annoying move higher, continuing until you get another catalyst, and you might sell off like another 10-15% within a few days, and then, rinse and repeat. So, the fast money in this type of a market will still be made to the short side, but it's going to be extremely tricky to time it. So, the slow money is to the upside, but, sharp corrective moves lower are definitely going to be hurtful, especially to people that are jumping late on the boat. So USD CAD is one of the best looking dollar pairs. So I'm in total agreement with that. let me see what else I had to mention before. Okay, let me just go to questions and we'll revisit quite a few stuff. BTC follows SPX. BTC follows SPX. First of all, as a general rule, I've told you many times that I strongly believe that Bitcoin is not a safe haven, is a high risk asset. So as a general description, I can say that I disagree with the general thesis, but as you see, that's not so much the case as you make it to be. Meaning, if you zoom really closely, I mean, just focusing, let's say, on what has happened since 6 months ago, it looks like that's the case. So we're seeing, that the correlation tightened up a lot once we saw risk off. As you see, they depreciated in lockstep, and they've appreciated in lockstep as well. But if you zoom out to have a view of the bigger picture, so for example, have a look at what has happened during the last 2.5 years, you'll see that, it's not that straightforward, right? Here in light blue, you see the S&P, and, on the regular chart, you can see the Bitcoin chart. So, so if you're focusing on the short term, that's more or less the case. And I think that tells you all you need to know about if Bitcoin is a safe haven or not. Now, is this going to be a thing, and is the correlation going to stay that strong in perpetuity? It remains to be seen. For the time being, they are quite decently correlated during the past 6 months, since actually we had the COVID sell-off. 3 people asking about USD CAD, which we already covered. So as you see, USD CAD is right on resistance, 2 paths forward from here. You like it to the short side, you short it here. You can risk very little money to make, a lot more. But you like it to the long side. I prefer it to the long side, as I made it very clear. You wait for a daily close above that trend line, in which case I think, you're buying it, and the next upside target is something like 200 pips higher. So, not bad. Peter Schiff on Twitter, gold breaks above 1800. It's not really gold going up, but the dollar going down. The Fed can't print trillions of new dollars without existing dollars losing purchasing power. Therefore, more dollars are needed to buy gold. Soon more dollars will be needed to buy everything. Ingmar, more or less, I agree. I mean, yes, gold is going, in general, is in an uptrend and will remain in an uptrend against all fiat currencies, simply because fiat currencies are not maintaining their purchasing power. As simple as that. And people that don't really understand this, I mean, I can't really help you. I can help you because, I mean, the evidence are so overwhelming. I mean, first of all, you have central banks that openly admit that they want to erode the power of fiat currencies, the purchasing power of fiat currencies. They have a positive inflation target. I mean, it's the same thing. It's a synonym, right? Saying that you want inflation to constantly be positive, or saying that you want purchasing power to erode, is one and the same. So, I mean, if people don't understand this basic thing, which, as I said, there is nobody that denies it, I can't really help further with that. So, the long-term trend in gold is going to remain higher. As simple as that. Richard says, central banks which sell gold are doing it to dig institutions out of a hole, derivatives, etc. Anything ring a bell? Yeah, that's one of the reasons. In 19th, UK sale, it saved WS Bank from huge losses taking on short gold derivatives. And the answer is, and look how much it cost to the UK people. Because imagine they sold all their gold reserves at $200, and currently gold is 9 times higher. So that tells you everything you need to know about that. Canadian fiscal budget for 2020, Ed says, to 2021 will be tabled in the House of Commons today. Okay, that's going to be interesting. I want to see their expected deficit. Still, that's not right. Parts of Greece equals paradise. Yeah, some Greek islands are really, really beautiful. Can you please comment on natural gas? Yeah, absolutely. Nothing really much has changed. I mean, yesterday was the last time I commented on that, or the day before yesterday, if it wasn't yesterday. I said that, first of all, we got a beautiful rebound from guess where? I mean, the area that we were expecting to get a rebound from. Once again, this 152 area acted as support. But I said yesterday that be careful because now we're once again in the middle of this rectangle. So, you know, being in the middle, risk reward just isn't there anymore to be either short or long. My personal viewpoint in natural gas and the way I'm looking to trade it is I have absolutely no problem being patient. I don't care how long it's going to take, but I'm only interested in trading it in one way, and that is buying a breakout above 205. Now, I wouldn't blame anybody that wants to sell a retest of this resistance area. I'm just telling you what I would rather do. Okay. I heard the guitar, Dale.
It's time for Mish Schneider.
Okay, perfect.
Michelle is with us today.
If I remember right, she trades indices quite a lot, if I remember right.
Yeah, she does. She's one of the best, Steve, I know at putting the whole jigsaw together between asset classes and within them. So looking forward to seeing what's on Mish's radar.
To listening to the interview as well. So enjoy. I'll be here until you have everything set up. Yeah.
Okay. Okay, Mish, welcome back. Waiting for you to unmute.
Can you hear me?
Yes, got you, Michelle.
Yes. I don't know why my volume is so low. I can barely hear.
Can barely hear me?
Yeah, I'm trying to figure out.
Because you're loud and clear.
All right. Speak again?
You're loud and clear.
All right. I just checked. I just raised the volume on my computer. That helped a lot.
Okay, good.
Should I share my screen?
Sure. We have to see the picture speaks 1,000 words, although
okay.
I could speak 1,000 words.
All right. You should see my computer now.
Coming up here. I just want to, before we get going, Michelle, I just want to tell you, I've read your autobiography. I found love on the floor, the trading floor.
Well, yeah, a few times.
I really enjoyed it. Just want to let you know. Anyway, so what are we looking at here, my trading warrior sister? So
well, first of all, I just want to say good morning to you and to everybody.
Good morning.
I showed up an hour ago and I was like, thank God I wasn't ready, so yeah. I'm ready now.
Okay, great.
Yeah, well, what do I see? Well, I mean, I don't want to repeat what is obvious. You know, the market is, you know, people have been calling it all different kinds of things, tale of two markets, et cetera, and clearly that is all accurate. But it's not very helpful if we're here to make money. So we've been really trying to separate all of that noise, all of the news, the COVID news, all of that stuff, just move it out of the way and look at pure price. And that doesn't mean that there aren't risks all over. But the interesting thing about the market is that after the initial rally, and let's just take NASDAQ and take it off the table here for a second, and Tesla, take that off the table.
Okay.
The actual inside of the market is really where I believe people have to focus and to see what's going to be next, and not listen to all the talking heads because it'll make you crazy. Of course, here we are talking heads, but the other talking heads.
Yeah, everyone but us.
Well, we're trading. I mean, we're not just talking heads. We're not
That's
just
true.
talking. We're, you know, talking the talk. We're walking the walk, right? You know, so, and we've had a phenomenal year because I had certain themes in my mind that I did not let go of, and you're going to know, you know exactly what that is. I've been focused on commodities, gold,
yes.
silver, miners for months, even before this year began. And so that's really where 35% of our portfolio has been in gold. And so today, of course, seeing it come up again, we're actually going to start taking a little teeny profit here because, you know, as traders, you want to sell into the exuberance, but keep your position and raise your stops. But you don't want to just get out because we don't know what's going to happen. And the gold is the perfect reflection for all this uncertainty that you're hearing everybody talk about. So I just wanted to put that aside. But what we're looking at here is XRT. So to me, I like to focus on the modern family. You know, that's my creation.
Yes.
And XRT is granny retail, not Amazon, not iBuy, but actual brick and mortar retail. And what's interesting is you had 2 bankruptcy filings today. Oh, goodness gracious, I'm not going to remember which stores it is because I read it about an hour ago. But nonetheless, if you look at the fundamentals in terms of the brick and mortar retail, it's been terrible. But yet, at the same time, the technicals have been very interesting in XRT, which is why I consider this to be the key. So what you're looking here is my 4-chart screen, and up here where my cursor is now flying is the 200-week moving average. This is better than what Grandpa Russell is doing, the 2000s. It's better than the transportation is doing. And it's definitely better than what the financials, particularly the regional banks, are doing. However, it still lags semiconductors, of course, you know, Superwoman off to the races, and biotechnology, which also peaked in 2015 until this year. So I'm watching retail carefully from a fundamental reason, because let's face it, we are still a consumer-based economy. And regardless of all the bad news, the market's forward thinking. Maybe they think that the consumer is going to come back in some big way, or this could be some aberration and it starts to sell off, and then I would get a lot more bearish at this point. So it's pivotal, extremely pivotal. As long as granny retail holds up, it gives me the best hope that the market will hold up. If it fails, sayonara market, it's probably going to take, I don't know, down to the lows, but I think we could see, you know, a good move down, a good solid 10 to 20% move lower. So there we are.
Maybe you could help me. And, you know, people that are not in our business, that are just looking at the world around them, I get this question all the time. I'm curious if you do and how you answer it. They'll say, Dale, you know, we have unemployment levels we haven't seen in our lifetime. You know, all the obvious things that are being reported, and, you know, we need relief money and, you know, PPEs, whatever they are, to bail out the economy. Why is the stock market going up in this environment? How do you answer that? Why is the market going up with what's happening to the real economy?
Well, I can say it in one syllable. Fed. The Fed. Well, that's two
that's
syllables.
What I say. They don't understand that, though.
Yeah, I mean, the Fed has made, okay, so to explain it to people, the Fed has made a commitment to backstop the damage from what happened with COVID-19. And they've made that commitment, and kudos to them. They've actually somewhat succeeded. And I say somewhat, which is getting back to gold, while gold is flying. Because in essence, what they have done is created a potential monster, unless we actually really do get through COVID and things actually do start to improve and they can reduce the balance sheet. So when the Fed came in and added all that money, and the government, by the way, also helped and gave money to people, companies, of course, you know, there's been a lot of bad stuff that happened with that, like finding out that billionaires were also getting stimulus checks. But the point is that the plan by the Fed was to make sure that they can catapult, or at least cushion, the inevitable fall that was going to happen from the businesses closing down and the economy virtually stopped. Did they succeed? Jury's out. But again, I can't say it enough. What's going to be the implication? So we have burgeoning money supply. Obviously, we have interest rates low, 0. They're saying they may not go negative, but they could if the market can hold here. And this, by the way, is not just in the United States. The entire European zone also did its very, very big share of money supply and stimulation for their particular economies. And so right now you're in this situation again, where if we can't come back with some real solid numbers, I mean, we all know that it was awful in terms of what happened with unemployment and businesses closing and bankruptcies, et cetera, et cetera. And you're going to see more bankruptcies come out for sure. But we also know that that could be temporary. And that's what the market has. Besides the Fed, it has hope. And, you know, nobody really wants to see this market crash. This is America. You know, we like to be bullish in our companies and our stock market.
Okay. Okay. That's a very good explanation. So after you do that, do people say, I understand, or they're still shaking their head? Because it's almost like you have to,
Oh, I think people do understand.
Okay.
You know, I do. I think that I've seen plenty of people who think that the worst is over, and plenty of people who think that we're really going into the crapper. But
Right.
there's really, to me, the biggest fallout of this is going to be what I've been talking about for months and months and months also, which is stagflation.
Right.
And that's where the education comes in for people, because you and I were around at the time in the 70s, but a lot of people were not, or if they were, they weren't really paying attention, except for when they found out in 1980 if they wanted to buy a house, they had to have a 20% interest rate.
Yeah.
But what happened in the 70s is very parallel to what's happening now. Couple of differences, because it all got spiked with an oil crisis that we had in 1973 after the Yom Kippur War, and then we had the embargo on the oil, and oil prices went berserk. So if we take oil out of the equation, essentially what happened was the economy stagnated and raw material prices started going up. At that point, the interest rates were low. We were ending a Vietnam War. Nixon was, already getting into doo-doo with Watergate. I mean, there was that's where the parallels kind of were. The dollar was down, but not really all that weak. People think this all depends on the dollar. It does, but not for the reasons why people think. The big thing about the dollar, and I'll get back to the stagflation in a moment, is not so much that we need a weaker dollar to see gold go up. And I heard a comment about that before, because the dollar and the relationship to gold has varied, and also to the market. If you look, there is no real rule on that. The biggest problem with the dollar is if, and this is a big if, we actually start to lose it as the currency, the world reserve currency. That is the disaster play for us as in the United States. And we have to hope and pray that doesn't happen, because our empire will be really at risk. So what we're hoping for here is that the dollar can fall, but not to a point where, the other countries like China, for example, and India and all the countries that still trade in US dollars stop doing that. That to me is the biggest risk with the dollar. But going back to stagflation, even a weaker dollar it can spur it, but it's really, I think, a food-based stagflation that we're seeing occur.
Interesting.
And let me put up a different chart for you, because we've looked at granny retail long enough. This is DBA. I'm not necessarily saying you need to trade DBA, but you know what? Let me give you even a better one than this, because I'm going to give you a different chart that I think you're going to enjoy seeing. PDBC. Okay, this is probably the better chart to look at. This is the Invesco commodity fund, one of them. There's a ton of them, but this is one of them. And I like this one because I'm showing this one lately, because this is really good for people who don't want to trade things like DBA, because it deals with their K1 issues in their accounts. This does not. But really what you're looking at
What's K1 issue?
The K1s, for their taxes and stuff, they can't trade certain instruments. Yes. DBA is one, soybeans, the ETF for that, SOYB, corn. Most of the agricultural commodities, they cannot trade because of their K1 issues. This one actually circumvents it. But more importantly, look at the base we're forming here. So we reached a peak low. When I say peak low, this was the low back in March when the whole market crashed at 1108. And now look where we are currently. This is a weekly chart. We had the gap down, where the other instruments, like I just showed you, retail is nowhere near The high of, let me go back to retail just so I can show you what the difference is.
Yeah.
The high here is still pretty far from when the market crashed. If we go back to the other instrument that I was just showing you, PDBC, we're actually taking out that high right before the crash. See that?
Okay, that last candle gap down was that was the crash.
That was the crash. Yeah, yeah. So
Okay.
now what we have here is this incredible looking base, and we haven't quite broken out yet. On a weekly basis, we would have to really close above 1251. Looks like we may actually get there. Let me just make sure that's the right number. No, excuse me, 1321. By the way, my assistant's walking in, so you're probably going to hear my dog bark for a second, and
Okay.
I'm going to apologize in advance.
That's fine.
If we close above 1321, look at the gap to fill here at 1380. We fill that gap. That, I think, would mean that any dip thereafter should be bought. We're already long certain commodities, but this is where I see the stagflation really coming from. Gold is actually relaying it on one level. Silver, by the way, would be another place to be watching. Silver is still, relative to gold, underperforming. It's coming in higher today at 1731. This is probably the gap to follow. I would follow this gap. Wait a couple of minutes, maybe 5 minutes, maybe even 30 minutes after the open, and then follow this gap up, because this is the first gap we're seeing in silver that's taking out all this work that we've had here. When the silver starts to outperform percentage-wise the gold, that's inflationary. We go back to that other chart showing that the food commodities are bottoming. If you take a look at soybeans, they have been bottoming, even though it's 15 bid at 1475. We don't know where it's coming. It still looks like it's bottoming. If we take a look at sugar, which you know is my little secret sauce, which is not so secret anymore since I talk about it all the time. But if you take a look at that, this is the daily chart. Look at that beautiful bottom here. All of this signifies to me that this is really where the best play is for the second half of 2020, as that is in the food commodities and the agricultural commodities and the food commodities. The gold is telling us, the silver could be telling us, certainly the interest rates are telling us, the dollar is telling us, but from a fundamental standpoint, we also have food supply disruption. We have deglobalization, which means countries need to hoard food. We've had some crop issues. Any kind of major drought we have this summer will only add fuel to that fire. We have a lot of reasons to believe, not only the fact that we go to the grocery store, we all see food prices higher, but in terms
That's what I was going to say. The man on the street could certainly relate to what you're talking about right now.
Yeah, and Right.
Okay.
I mean, the big save, the reason why inflation hasn't really been talked about much is because the oil prices are still relatively low. But if we're moving more to a clean energy, solar energy environment, look at the prices there. They're starting to go berserk. So maybe we're just seeing a major sea change in terms of where our energy focus should be. And I think that would be great for the environment. But certainly looking at oil as the big tell for inflation, I think is putting blinders on.
Okay. Yeah, in fact, Goldman Sachs, I believe, had a commodity index that was with gold or without oil or with oil. They may have taken something out because they felt it was distorting it, but
this is the Goldman Sachs one that you're talking about. This is their commodity index, GCG, and it looks kind of similar to the other one I showed you.
It does.
But this has a certain components in it for sure that relates to, but not heavy in the metals yet, or it would be much higher. But look at that. This also looks like, the base, it's holding. This dotted line you see right here, that's an exponential moving average on a weekly basis. Hasn't been above that since the beginning of the year. Right now we're holding above it. So you got another thing to look at, a weekly close above 1055, let's say. Not only takes out all this work, but it clears and closes above the exponential. That tells me that it's anticipating commodity prices could go much higher. In the agriculturals for sure.
Okay. And you've been there before. Isn't it interesting that when cycles repeat, you could recognize it if you've lived through it. And you lived through
Absolutely.
it, so it's an edge, isn't it, Michelle? I mean, a lot of people weren't trading back then.
Well, and it was 40 years ago, so people don't even think about what can happen. And now, you know, that situation is on steroids because of the central banks and the Fed. You know, this is, I hate to use the word unprecedented, it may be the most overused, hackneyed phrase we've had in 2020, but it's applicable. And going back to sugar, by the way, what I didn't mention before is that sugar actually went up to 60 cents a pound in the mid 70s before gold took off and silver took off and the food commodities took off. It was kind of this weird, that's why I say it's the secret sauce. It was kind of this weird tell that if people are paying that much for sugar, which is in basically everything during bad times, which people will turn to sugar during bad times, especially lower socioeconomic groups, but everybody, that was my relay. And that's why I've been so focused on that sugar market.
Okay. Yeah, and you were talking about it a year ago.
I've been talking about this. I could see this coming. I was early to the game, but that's okay. I'd rather be early and be prepared, and you know, which also meant getting a little bit ahead of myself. You know, well, but soybeans. I'm going to go back to soybeans. Soybeans. We've actually been in and out. We've made a little smidgen of money. Now we're actually making good money because we got in down here, you know, right when it was starting to push against the 50-day moving average. So now, you know, we're well in the money. We have a full position. We have a protective stop that will actually lock in money. But
Isn't there a crop report this week, I believe?
USDA report came out last week.
Oh, last week. Okay.
Yeah, and the big thing about the crop report last week was that corn, another one that's basing, had a lot less plantings than previously. So if you add that all together, of course, there would be less plantings. I mean, for many reasons, you know, the fact that there aren't that much, you know, in terms of labor as there was, but also because you cut back production when you have an overproduction and your prices fall. You know, it's interesting. We look at corn. Corn is the first commodity that was ever traded for hedging for farmers. This is why the whole commodities market was invented, was for farmers to be able to hedge somewhere for good crops and bad crops in a futures market. So it's a little history right here. So the corn, if you really want to watch the original kingpin of commodities trading, watch the corn market, which of course is also now in a recuperation phase above the 50, above the 10, obviously well below the 200-day moving average.
Those aren't priced in bushels. What's the pricing there? I mean, you know, corn I think is 350.
Yeah,
so
let me take a look.
What does 1247 mean?
This here is the ETF, and the reason why I show the ETF is because a lot of people will not
don't trade futures.
Yeah, they're not going to trade futures. They don't understand it. It's a dangerous game, et cetera, et cetera,
it's going to be. They're going to have a ton of corn delivered in their backyard for the barbecue.
Yeah, and in the cash, July is trading 342. So I don't know. Let me see. I'm just trying to see how it's priced because I don't even remember. I can tell you about oil.
I think
sugar.
It's about $3, $3.50.
Yeah, exactly. So it's
anyway, I think that our viewers would find your look in your lower right-hand corner. Maybe you could spend some time talking about how the floor trader pivot works.
Absolutely. Oh, you know what? You're one of the few people who has ever asked me to talk about that.
Well,
so
you know, I just read the book. I found love on the floor. Trading floor.
As I said a few times.
All right. So we're using these kind of pivots before the exchanges were converted into bowling alleys?
Right. Well, you know, I didn't know about floor trader pivots back in the day. I was doing point and figure charting, and I was just doing a series of X's and O's that looked kind of like a football field, you know, when the coach is planning the moves. So we've gotten a lot more refined through the years. So these are common pivots. Every single trading platform has floor trader pivot, which is a midpoint pivot, which is what you see here in gray, and then has resistance 1, resistance 2, resistance 3. On the flip side, support 1, support 2, and support 3. And these are mathematical calculations. And they work really, really well. I think that you probably would see the algos looking at them as well. And so one of the things that we use them for is really two things. One is we like to look at the stack of the actual floor trader pivot or the midpoint pivot. So if the stack is negative, so here's a perfect example going, let's use corn as an example, or we can look at something even more volatile. Let's put up SPY.
Okay.
Let's look at something that's a little bit more interesting. So with SPY, if you look at, this is just going back to June 24th right here, we had positive pivots, negative pivots, and then a negative pivot here, and it opened up above R1. So if we have negative pivots, we like to see R1 hold. It's not perfect, so that's why we use a combination of things, but you can see that what you would think in the morning when this gapped up over R1, that meant that this was going to continue to go. And it did for a little bit, but not that much, and then it failed by the end of the day R1. So if you're a day trader, you would say, oh, after coming in with negative pivots, taking out R1, I should buy. But then you would look at R2 and you would be more encouraged maybe if it cleared R2 that it was going to go further. Right. But then as a day trader, you would probably sell once it broke R2. And if you kept anything by the end of the day, you would gotten out of the rest of it at R1. That's day trading. Then if you look further, you can see we had negative pivots, and here we got up to R1. So the next day we had positive pivots. We also use it for a 30-minute opening range breakout.
Okay.
So the first bar, every bar represents 30 minutes. So in this case, on the 30-minute OR high was at 305.38, we probably would have been a buyer over R1 at 306.28. And look at that move now that you get. You get the follow through. So you may get the fake outs like this and make a little money or lose a little money from a day trading standpoint. But if you were doing that same day trading consistently every day, if you bought after the positive pivots and the R1 breakout and the 30-minute OR breakout, you would have done very, very well. So now let's move to today, or coming into today. So yesterday we couldn't get through R2. I mean, that was 2 days ago. Then we gapped lower, but we held S2 initially. Looked like it was going to go. Let me see if I can pull this down. You can see it up here, but it never cleared R1. And then, of course, it broke S1 and then closed under S2. So now coming into today, I don't have forward-thinking pivots, but the market is about to open, right? What you would want to look for now is to see, A, if it can clear back over the floor trader pivot when it opens up. And then B, if it can clear back over R1. If you just want to trade it just for information, that would probably mean something very good for the overall market.
Do you use it to trade both the long and short side of the market, or just for long?
Absolutely. If I wanted to go short, let's see. Well, let's look. This is an older short. This is an older short because I'm just trying to think off of. Mylan was something we went short back here when it broke down in the weekly, it broke down under the daily, etc. But let's just use Mylan as a good example, going back a little bit in time here. We go back a little bit in time. If you have negative pivots, here's a classic example, okay? If you have negative pivots like you have here, and it gaps down, and it takes out that first bar under S1 in the 30 minutes, you've got a good opportunity to go short. And look at that, you had a nice short there until it started consolidating. So to me, the pivots are really good. They're like part of the navigation system. It's not the only part of the navigation system, but especially if I'm looking to establish a new swing position. Let's take a look at one we put on yesterday. And I tweeted about this, so I don't mind showing it. Space, one of my favorite stocks for a buy and hold type of situation, which I barely ever say. I never utter the words buy and hold. But I really like this company and I really like this stock. So yesterday, it came in with slightly positive pivots, right? But it actually didn't do very much. And then another thing I'll do is if it breaks down under that first 30-minute OR bar, which the low was 1343, doesn't break S1 with the positive pivots, comes back and trades back above that floor trader pivot, I will buy it. That's called an opening range reversal. And that's what we did. We got in at 1650 yesterday. Oh, excuse me, wrong day. I'm doing this again. Here it is. Came in with positive pivots, held S1, cleared back over the floor trader pivot, and we got in. And so that is another way I'll use it to enter a swing trade.
That's
so
an interesting technique. Yeah. I've heard you talk about those opening range trades before.
This is the market gauge specialty, and it comes back from the floor days.
Right.
In futures, they would open up the market, one by one by one by one.
Right.
So it would be, here we are in July. So July would open, and then August and September, October, November, and then they'd close it down, and then they would reopen all the months together, and then you got your opening range. Oh, and here we go. Okay, so we're here. So let's take a look while we're here at SPY. Okay, so now if we take a look at where they open in the pivot, since we're doing a little pivot lesson here, SPY is under the floor trader pivot. So right now, unless it takes out this floor trader pivot here and a 30-minute opening range, that's what you would want to look for. Come on, come on, come on, come on. It's about 315. Let's just round it off. If it can hold here on a 30-minute OR, take out 315, then I would say I would certainly not have a negative bias for the day. I would have more of a neutral to positive bias for the day, just based on the pivots.
Okay.
Okay.
I have a question. Do you use TradeStation as a platform to trade these commodities and stocks?
Yes. Yes.
Okay.
I use TradeStation.
There you go, Paul.
Yeah.
And Sarah, yes, there is a recording of this you could find later. Why don't we go to how people find you? So they, if they want to pursue this and learn about this, I know you also are a great teacher.
Well, thank you, Dale. Well, first of all, I'm on Twitter at Market Minute. That's really where I do most of my work in terms of for the public to see. And actually, gold, I tweeted about last week that it was the last dip in gold to buy, and it turned out to be the case. It's trading at 170 right now. In fact, I have to send an alert out to my people to tell them to take a little profit here, because that was my profit target. You can also go to our website, marketgauge.com, see all of our products there. I have a product called Mish's Market Minute Advantage that I not only teach and coach and do a couple of videos a week, but I also send out real-time alerts when we get into a trade.
You want to show your website?
Yes, let's show the website here. Let's get out of, let me get into my website. And so that is another great place to talk to us. And if you want any kind of, oh wait, hold on, it's not going to move over here. Let's see if I can move this over. You know what I'm going to do? I'm going to stop share on this one, and I'm going to share a different screen. Here we go. All right, that's my website. There's me. And there's my book, Plant Your Money Tree. And we have all different types of products and services, from quant models to tools to education to discretionary trading, which is really what I am right here. I'm the discretionary trader. And what's great about this service is everything I talk about, I teach constantly. But more importantly, you can also just do what I do. I give you real-time trading alerts with stops and targets, and then I keep track of that trade as the trade moves on. And then, of course, I'm on LinkedIn and Instagram and Facebook, and lately,
StockCharts.com.
StockCharts.com has been a big one. Every Thursday, I do a half an hour, full on. Here's what I'm watching. Here's why. Here's your actionable information. And also, if you go to my media page, I've been all over, interviewed by lots and lots of people, including yesterday, TD Ameritrade. So I'm pretty easy to find.
Yeah.
You can't miss me.
And you're getting the exposure you deserve, Michelle, and really keep up the great work. And it's great to have you as a resource. And I'm glad you've become a regular here on Face, and want to wish you and Keith and your family safety during this, and that pips keep raining down on you and the family.
Oh, thank you so much, Dale. And we wish the same for you. You're such a good guy. And we go back, me and Dale, we go back.
we go back. And
we go back.
and you know what? It's most important. we move forward, Mish. So
Exactly.
thank you so much for hanging out with us again for half an hour and carrying on with your theme that you've been very correct with on accumulating commodities for a stagflationary environment. I really like that theme.
Well, I hope to see people make money that way in an area that most people don't think about, especially if they've been equities traders for the last 10, 15 years. They haven't
Yes,
even thought about it.
it's still good to have you and me and just a few others that have survived the commodity baton death march.
Yeah,
And
and
we'll
here, by the
know.
way, here's your gold. Here's your gold chart right here.
Yeah.
So we have a nice little open right here. So,
Yeah. Okay.
okay.
Well, thanks again, Michelle. And you could follow Michelle at Market Minute on Twitter. Find her, and she's a great resource and ethical person. And that's more important than what was your best month. So thanks again, Michelle. Everyone, remember, don't just count your pips, count your blessings. We'll be back with you tomorrow. Good hunting. And that's a wrap. You're very welcome, Monica. And yes, I will invite Michelle back again.
Thank you.
See you, Michelle.
Bye-bye, Dale. You
All
take
right,
care.
bye-bye. Bye-bye.